All right. Hello, everyone. Welcome to episode 83 of Going Live with Good Soil. We do this every Tuesday, same time and same place on Spaces and YouTube Live. We talk about the macro markets, Tesla, Elon, and then we also touch on some other stocks we follow and take a bunch of Q&A at the end. How's it going, Matt? How you doing today?
Doing pretty good. It's been a nice January, obviously, with Tesla running up so well, and it's been interesting. Just got the 10K release this morning. Had a good earnings call last week, which we'll get into. So yeah, I'm doing pretty well. How are you?
Yeah, no, I'm doing well as well. Doing well. Yeah, it's been a great week or two for Tesla. I mean, we're at 180 closed on Friday. Now we're at 172 ish as we're talking. So it's a little bit of a drop back from the highs at the recent highs end of last week. What a monstrous few days last week after the earnings report, right? I mean, it was just zoomed up 10% each day for I guess on Thursday and Friday and. After the earnings report on Wednesday, which we'll talk about in a second. So yeah, I mean, I think everyone here is probably in a pretty decent mood, which is good considering, a lot of times we're broadcasting on like a new low or something. So um, yeah, what are your thoughts on the Fed tomorrow? I mean, this is the big decision tomorrow. Is 98% probability that's just a 25 basis point hike, so nothing new, right? Everyone's going to be watching. Number one, the language they change in the actual statement they put out. Number two, how Chairman Powell interacts and what language he uses in the less scripted Q&A press conference he gives, right? So those are the two kind of major things for tomorrow, right?
Yeah, I mean, I think the actual hike, like you said, is almost certainly going to be 25 basis points. So, if there's any deviation from that, that would certainly move markets. But I think what the market's really going to be looking at is whether Jay Powell kind of tones down his commentary at all. I mean, with all the data points that we've had recently on PPI and CPI, it seems like it might be time to maybe soften language a little bit. But I don't know. We've thought that before, and he's kind of gone the other direction. So it wouldn't surprise me if we get some volatility into tomorrow afternoon when he's speaking.
Yeah. Yeah, I wouldn't be surprised if tomorrow is a kind of a down day going into his speech and then the market reacts positively either way. If we really are at the start of recovery in the stock market, like if we look back in a couple of years and be like, oh yeah, the beginning of 2023 was when the market recovered, then um I think almost no matter what he says tomorrow, the market's going to be continuing to go up, starting next week. It might take a couple of days to digest whatever hawkishness he tries to, whatever jawboning, I guess that's the term people use for him trying to talk the market down. Like the Fed doesn't want the market to rally too quickly ahead of its decision making to make a pivot. I think so. It's almost certainly baked in that he's going to jawbone some amount. Is the big thing reversal we saw, we're talking about referencing is in August. Remember, there was an initial we thought maybe back in July and August the market was recovering, and then they had he had that big press conference at Jackson Hole, really hardcore jawboning the market down, and the market crashed again after that. So I don't know if that can happen again at this point, though, given all the data that's come in with the CPI, recent CPI prints and deflationary indicators kind of being shown. I'm not sure the market will believe him this time.
Yeah, no, I don't think so either. And I mean, if you look at the yield curve right now, it's so significantly inverted. I think the 6 month is the peak. That's at like 4.8% yield, and I don't have it up in front of me, but it's more than 50 basis points lower when you go out to further maturities. So like the market doesn't at all believe that they're gonna keep rates high.
Mm-hmm.
And I don't understand what the justification is to keep rates high right now, given all these data points like we've been talking about. I mean, before that Jackson Hole meeting, the last comments we had from him was that they were going to be, data driven and, kind of respond to whatever the economic data indicates. And then it was like the market rallied off of that, and he just decided to kill the rally, it seemed like. So
Yeah.
I'm curious. I'm curious what you think, though, Emmett. I mean, I was kind of thinking for the last, I don't know, basically since that Jackson Hole meeting, a kind of soft landing was off the table just with how high they were raising rates. It was going to push the economy into recession. But there's been kind of surprisingly, at least to my opinion, strong economic data aside from
Hmm.
CPI. So like GDP has been reasonably strong. Payrolls have been relatively strong.
Hmm.
So do you think a soft landing could be in the cards for this year? And you could have, just like they solve inflation and the economy doesn't get totally whacked, and they kind of moderately lower interest rates to, I don't know, 3%, 4%,
Yeah.
something like that. Do you think that's in the cards?
Yeah. I do. I think you have to define what we mean by soft landing. How would you define soft landing before I answer? And I'll think about how I would define it and try to answer.
Yeah, I guess I would just define it in, you don't have the Fed kind of pushing the economy into both a technical recession and then kind of significant harm to the consumers and into the labor force. So like more significant layoffs than we've seen so far, increased unemployment rate, and
Yeah.
negative
Yeah.
GDP.
Yeah.
So that I guess that's what I would say. It seemed like we
Yeah.
were headed on the course of going down that path, and now
Yeah.
I'm less sure.
Yeah, I would say the same thing. I would define a soft landing. I guess the best, simplest way to define it is not a technical recession, which is 2 quarters in a row
Right.
of declining GDP. And we sort of technically had that, though, didn't we? In the middle of last year, I think we had 2 quarters in a row after a correction. So we sort of did have that technical recession, but everyone denied it. So I feel like that actually
And then it was
happened.
redefined.
Yeah, then it was redefined by politicians and whatnot going into the elections and all that. So I do agree that there's this new term being thrown around, like the rolling recession. I don't know if you've seen that in like
Oh, I haven't seen that.
financial, CNBC or Bloomberg or whatever. And I'm also a little bit concerned that Elon in the earnings call, we'll talk about Tesla in a second. I know that's what most people follow us for, but Elon referenced a couple times in the earnings call how worried he is about a significant recession. That he said, like, I hope it doesn't happen, but I think it probably will. He said something like that a couple times. So I'm a little worried
Yep.
because Elon's been like this oracle of the macro markets, surprisingly, or maybe not surprisingly by some, but for me, I feel like, and maybe this is the time he gets it wrong and there's not a significant recession. Maybe it's just kind of a soft landing, like we're speculating here. So I do kind of think there is sort of this rolling recession where like certain categories of the economy, have a big decline. Like maybe the used car market has a big decline, housing sector has another huge decline, but other sectors of the economy are strong and stay strong enough so that overall the economy doesn't have a technical recession. So I kind of feel like that's going on. Um, just because I also feel like the actual inflation we experienced wasn't really true inflation. It was like a shock of supply chain shortages and the COVID craziness. It wasn't really true inflation, in the sense that we've experienced, the economy has experienced in the last 100 years of history or whatever. So it's just a very different situation. Um, so I do think there is a soft landing in play. I think that would be great. I hope that's the case. But yeah.
Yeah, and I mean, if that happened, it would be just an absolute boon for stocks, and it's kind of surprising to me that we're even talking about this now, because I really did think it was kind of off the table, because it was what we were talking about like last year, or in like November, December of 2021. We're like, oh, maybe we could have a soft
Mhm.
landing, and they'll raise some rates a bit, and the economy will kind of go along. And instead, I think these supply shocks, like you were talking about, I mean, and it's the stuff that Kathy Wood's been talking about for 2 years, and it's my kind of view of it is her assessment, which was that it is like a supply shock. You had all the like the supply shortages of shipping, and raw materials prices were just through the roof, and then you had like the supply chain itself for many industries, and many for many industries just went through this really absurd period of incredibly tight supply and high costs. And I think that a lot of people around that time, 2 years ago, were thinking that might take 3 to 6 months to roll through the system. And instead, it took like 2 years to roll through the system. But I think we're kind of, now that we're, 2 years from that point, or a year and a half from that point, it does kind of seem to me that that original assessment was right, but it was just the length of time that it took to roll through the system we might have underestimated that. Because I agree
Mhm.
with you, it doesn't seem like there's anything structural with inflation right now,
Mhm.
and so we might have a situation here where we're just able to recover faster than we thought we could 6 months ago.
Yeah, I mean, I think being optimistic, but we've been optimistically wrong a lot of times the last 6 months or so. So at some point, our optimism will be right, and maybe this is the time. So we'll see. The other thing I wanted to mention is there's a big jobs number on Friday, and I can't remember the guy's name, but Bloomberg Television had this guy who used to do stuff for the Fed. He's just very aware of all the process of the Fed, and they were interviewing him and asking him about does the Fed, all the data they've gotten, do they get any new data for their meeting today and tomorrow before they release their statement? And they were curious, like I've always been curious, is the Fed getting like inside knowledge of the CPI print or maybe the jobs report on Friday, like today or tomorrow ahead of the time, so that they can make a different decision tomorrow, versus and not be like caught off guard by a surprise jobs number that, reflects something different than what they're doing with, their statement in language and hawkishness or dovishness. And the guy kind of said, no, they don't get advanced data. That maybe that the chairman himself, Powell, will sometimes get the headline number the night before the release himself, but no one else on the Fed does, which is interesting. I
Yeah,
thought
that
was
seems. Why would he get it? Like, I don't know.
just
That just
him
seems
the night
so
before.
strange.
Yeah. I guess he could
But
call into the president and be like, "Mr. President, there's a great." I don't know what he would do. Why would he get it the night before? I don't know, but apparently he does. Yeah, maybe just to be prepared to, if he's speaking the next day, he's not caught off guard on how to answer questions or something. I don't know.
yeah, yeah. But I mean, in that case, that wouldn't come into play for tomorrow, since that's
No, won't come into play. Yeah. But
36
if people
hours
are
beforehand or
wondering,
so.
yeah, if people are wondering if they do get some kind of advanced notice of what the jobs report will be on Friday before their statement in language tomorrow, they don't apparently. So this guy seemed
I
pretty sure
so
of it.
I see somebody in the comments making me laugh. You guys probably don't feed a family of 4 or commute to work daily. There is inflation. That's true. I feed a family of 8. So like
Oh my
I've
gosh.
definitely noticed is we're not saying there's no inflation. The key from here is whether the rate of inflation is increasing from where we are today. We're not saying that your prices are going to be lower, or that they're going to get back to where they were in 2021. We're
Yeah.
saying that they're going to level out from here and potentially drop a little bit if there is deflation. So no, like we're not at all saying that there isn't inflation. It's
Or there
very
wasn't
obviously
inflation.
happened.
I think there was an inflationary shock, yes,
Yeah,
and we've kind of reached that plateau. That's sort of what we're saying, I think.
yeah,
Yeah.
yeah.
Um, but that's a good comment. Yeah, keep comments coming. A lot of good comments in here. Um, so the other thing is the markets, going into tomorrow, the markets for Tesla has been crazy. I mean, the Tesla volume on Friday, I didn't see anyone comment about it, but it was over 300 million shares traded on Friday alone when Tesla went up like 11% to 180. And I also saw that 13% of all the options contracts traded, 13% of all the options contracts traded, all the exchange traded options contracts, that includes index options, which is like the S&P and the NASDAQ index options. 13% of all the options traded were Tesla stock options on Friday. That's like insane. I mean, what's going on here, Matt? Why
Yeah.
are Tesla options such a huge thing suddenly? What do you think's going on?
I think options with Tesla has always been, I would say, an overweight portion of the kind of volume mix between equity and options. Spot Gamma, Brent Kachuba, I think is his name, had another interesting tidbit from last Friday, that half of the options volume from last Friday, half of the Tesla options volume, was for that day's expiration. So, and 170 strike was the largest single strike. So you had a lot of people making like huge bets on a short-term kind of one-day move, which obviously paid off really well. I mean, those would have done incredibly well throughout that day as the stock
Yeah.
just continued to rally throughout the day. So I don't know. I mean, it's strange to have such high volumes, especially on such short dated kind of maturities. But that would also kind of make sense if you've got a lot of short dated call options. That would really, perpetuate a short term rally. And then when Monday, Tuesday comes around, it starts to give it back a little bit. So which we certainly saw at least yesterday. So I don't know. I mean, I think with the price being as low as it was, and with Tesla getting hit as hard as it did. I think there are a lot of people who are thinking that options are starting to look relatively more attractive, probably more attractive than they have in the last year or two.
Hmm.
So yeah, I don't know. It always kind of surprises just the quantity volume.
Yeah.
You don't see this on like Microsoft or Amazon or anything like that. So
No.
yeah, it's interesting.
I see Harry Chu in the comments making a good point that it seems obvious now that the volume increase in the Tesla are attributed to the options market. I think there's a strong case to be made for that. Yes, last week that the stock volume going to 300 million plus shares on Friday is is the dog that had its tail wagged by the options market because so many options became in the money. Is that it? The dog that wags? I think I got it reversed. Sorry, I got the metaphor reversed. So basically, the
The tail that
options
wags the dog.
market,
Yeah.
yeah, the options market is the thing that caused the stock volume to be at a record high on Friday because there were so many in the money options that were sort of, I guess you could say, a mini gamma squeeze of some sort, which leads to lots of delta hedging by the market makers on the other side of the call options. So they have to like buy enough Tesla stock. And we've seen this before. Whenever I've seen these like kind of mini gamma squeezes or major gamma squeezes, the volumes just go absolutely nuts because I think the options market makers who are on the other side, who are caught in the gamma squeeze, I think they're the ones most responsible for the
Yeah.
super large volumes. I don't think like even institutional traders or retail traders, people just buying and selling the stock, like if they need to get into or out of a position of 100,000 shares or a million shares, I think maybe they run an algo or do something. But I feel like the options market makers who have to gamma squeeze out of a million shares of Tesla or into buy a couple million, I feel like they do these algos, maybe these high frequency trading algos that maybe creates 10 million shares of volume for every 1 million shares they need to hedge additionally, delta hedge or something. I feel like their high frequency trading algos almost artificially inflates the volume so much. That's sort of maybe something I've been thinking about when I see these kind of squeezes happen with the options, resulting from the options needing to
Yeah.
be delta hedged.
And I haven't seen anything on the put volumes, but I know from like guys like Brad Munchin on Twitter has said he put on a lot of Tesla puts, I think right before earnings, and he obviously got smoked on those. And so
Yeah.
anyone who was buying puts, well, the market makers have to be delta neutral on the puts as well. So when the puts start to become more
Yep.
worthless, or the delta
Yeah.
decreases on the puts, that also creates buy pressure. So you've got like
Hmm.
a weird combination of
Double
like
whammy. Yeah.
the puts decreasing, and so you wanting to increase your delta to offset that, essentially needing to sell or to buy, and then also needing to buy because of the calls. So it's a strange phenomenon, and I think it may have just been a kind of perfect storm of increase in activity on both sides of the equation to really cause this massive rally that we've seen in January.
Yeah, I mean, the big question is how many call options are still outstanding. I'm going to start trying to find that data. How many call options are outstanding for like February, March, for the, what's the open interest of the call options now versus, a month ago or 2 months ago, even like, is the open interest increasing of call options specifically? Open interest means like, how many
Yeah.
people are engaged in what's the total net amount of contracts by like investors that they're betting on one thing or the other, that's sort of open interest. So I want to see sort of measure that open interest of Tesla and see if it becomes a trend again, because I don't know what to think about all this option trading with Tesla. Like on one hand I'm like, wow, it's like it's crazy, I did very well and you did very well with options trades, but I feel like um too much can be a bad thing, what's
Yeah.
the right amount of options trading before it becomes a poison to the stock, because it creates unnecessary volatility or just too many people, ruining their lives, betting their net worth on call options, and then the stock comes down. There's just a lot of negative effects that can happen from too much options, I feel like, being traded in Tesla. And I feel like we're we're got to be close to that. If 13% of the options market in the whole country is Tesla stock options, I mean, Tesla's not 13% of the S&P. It's like 1% of the S&P or 2% or something. Like I don't know. Something seems up with that. It just seems I have to think about this, but there's going to be some problems, I think.
So another thing I was just thinking of just as we were talking, how to share this because I was surprised. This short interest, can you see that on my screen?
Yes.
Look how significantly that ran up into January. I mean, this was really flat, like essentially zero short interest. And then, it was 20 million in early January, 20 or 52 million on the 23rd. And then it reached a peak of 73 million shares short on Friday. And so like people, that's got to create some covering as 75 million shares short. That's a lot. So there very well could be some kind of a short covering in addition to all this gamma stuff that we've been talking about that was potentially causing some price action there.
Yeah, there could be some amount of that. That's true. Yeah, I mean, these are types of. This is like I don't know if I wouldn't call this technicals or technical. I don't like technical. When I think of technical analysis, I think of looking
analysis,
at flows analysis. I mean, I think of technical analysis as like trying to create pictures from the charts, and like head and shoulders, or does that look like a flag and staff or something? I don't know, but or the what's the other one, the red cross or the death cross or something,
Yeah.
Yeah, there's all these interesting weird. I don't like those technical indicators, but the technicals of actual like what's going on with the options volume and the flows, I think, and the short interest, those types of indicators I think are important to pay attention to. Sometimes there's valuable signal in it. I mean, sometimes there's not, but sometimes there is. So
I mean, delta hedging is a very real issue that can become skewed one way or the other that can lead to pretty significant share price movement. So that's not necessarily technical analysis. It really is more of a kind of indication of how are traders or investors positioning themselves and how might that kind of create a flywheel that can lead to really rapid movements.
One thing I see in the comments from Alexis A is, I see T Nelly say you led on options, Emmet, and it matters. like Mary Barra, you led. So, but then I see Alexa A in the YouTube comments saying, "What do you mean there is going to be some problems?" And what I mean by this is there has to be some limit where options become kind of poisonous or mess up and ruin the market. There has to be some limit. And what is that limit? I mean, right now, 13% of the options contract being Tesla, that's like very high. Like what about, well, let's just say hypothetically, what if it got so extreme that no one traded or held stock anymore and everyone instead just bought and sold call options and just like, that's it. Do you think that would be a good thing for the markets? I don't think so. I mean, that's the trend we're heading on, right? So somewhere between now and that point, is there has to be some kind of, I feel like is where it's poisonous, and maybe we've already crossed that line. I don't know, but it's just a dangerous trend, and I don't know how long it can continue before maybe regulators or it just becomes bad publicity for the media to see like so many people lose their life savings and a couple other people get rich because they timed it right. And it's almost like a major big lottery being created and everyone's throwing their chips in the Tesla lottery. And 80% of people are going to lose their life savings, but 20% of people will make 10 times their amount of money. So it's a lottery in your favor, but it's not it's not really what the stock market was made for. Does that make sense? That's kind of what I'm thinking.
Yeah, I'm kind of surprised to hear you having such a strong take on that. I would say like if you're putting your life savings in options, you've definitely got a problem. Like that's not what that's for, but it's for like small concentrated bets. I think when you have a view on the market, like we've had kind of historically. And so I think where I think options are actually valuable is, if there is kind of disagreement on the fundamental valuation, it can help price discovery. It absolutely increases volatility, but if something's drastically undervalued, it can kind of revalue things more quickly than if people were just kind of gradually accumulating stock over time. So I maybe have a less negative view on it overall. And I think like where we were in like late 2021, where you had really significant options exposure, then I think we've come down from the levels that we had there. And I think frankly, we probably got the market probably got a little ahead of its skis on kind of the valuation for Tesla. So I think that might be a fair point, but to me, it's the movement that we've seen in the last month or so is not necessarily indicative of kind of sustained. Like if we're 6 months from now and it's still like more than half of all the options market, I might tend to agree with you. But for a
Yeah.
short term kind of movement after the stock had already been beat up so badly, I'm less concerned that that's a structural issue that's problematic.
Yeah. By the way, just 5 minutes ago, Reuters headline: Tesla considering a plant near Mexico City's new airport, says a Mexican official. Well, I mean, it's sort of we already have known that Mexico is an upcoming gigafactory location. I'm pretty certain. I think 70% chance it's going to be in Mexico, one of the next one or two gigafactories. I think Mexico's. I've taken Canada off my list. I think Canada is like 20% chance, but I think Mexico very high chance. Anyway, interesting little news item that just came out 3 minutes ago on Reuters on my screen here. But why don't we go into the earnings report reflections? And we spent a lot of time on options and stock volumes, but earnings report, that's the fundamental. That's the thing that drives this, that, rightly so, should be the thing driving the actual direction of the stock price and the supply and demand of owning shares of the stock. So what were your thoughts on that, Matt, of the earnings report?
Yeah, it was interesting. I mean, the first thing I'll say is the model that we went over last week was clearly over aggressive on some stuff. So
Yeah.
the kind of improvement in cost of goods sold, especially that was probably the biggest thing that was off. So there's probably some reasons we were overly optimistic about that. I think commodity prices is probably one of the biggest ones. But it was a little bit surprising to me that given the increased output of the plants, we didn't really see a meaningful cost of goods sold improvement. So that was one kind of takeaway. And summarizing the whole sort of thing, the numbers were slightly higher than what the market and what the street was expecting. So it's kind of similar to Q3, where it was like a modest beat, but there was a little bit of weakness in that. That credit sales were a big part of the overall earnings report, and like the tax rate was really low. So from a quality of earnings standpoint, it wasn't necessarily the best print. It wasn't bad by any stretch, but it was not like you saw those numbers and were just like, oh, Tesla's going to rally like 30% in the next 2 days.
Yeah.
So
I
I
thought the
found it
stock
kind
was
of.
going to take a hit. I thought the stock was going to take a hit after. I mean, I think you and I and most longtime bull, Gary Black, I'm sure, I think it seemed to imply that. But I think a lot of us sort of thought Tesla might take a hit after that earnings report, right?
Yeah, well, and that was the kind of interesting thing, because when the report came out a little after 4 o'clock Eastern, it was like bouncing up and down, but it was mostly down after hours. But then once the earnings call started and they started sharing some news on guidance, that's when I think the rally really kicked off. And frankly, that didn't surprise me, because I think even before the earnings report, I'd said on Twitter a couple times that like the number itself is not necessarily what matters, because like these are going to be old prices anyways. So Q4 is not going to be indicative of what Q1's earnings are going to look like. What's going to be much more impactful for the stock going forward is the outlook. And I think they did a really, really good job of kind of reassuring on the outlook side. So they actually gave guidance on volumes. They gave guidance, or they at least answered questions that were supportive of strong gross margins and operating margins despite the price cuts. And I think that was like all the market needed to hear. They're like, oh, okay, good. It's like sky's not falling. This is really
Yeah.
nice. So the guidance
The,
seemed to be much more important, and that's what caused the rally.
Yeah, I process it a little differently, I guess, my cause and effect. I think I feel like if I try to step back and listen to the other earnings reports and earnings conference calls, not all of them have been on the same level, and some are Elon, just rambling about full self-driving and how revolutionary it's going to be, over and over, and but some of the earnings calls, I feel like Elon has said similarly bullish things, and the market still reacted negatively. And then we say, oh, well, no one believes Elon. He has to prove it. And I feel like that people could be saying the same thing about what he said on the earnings call. Like, oh yeah, he has to prove they're going to do 2 million. Why would they put 1.8 million if they really could do 2 million? I feel like the reaction of the stock was more a reaction of how oversold Tesla has become, in the last few
Sure.
months. It's just such an oversold name. Like, there's all the week longs have been cleared out of Tesla. Like everyone on margin who owned Tesla, they're pretty much out of their margin balance now. Like everyone who
Hmm.
had these long call options in the money, they no longer are in the money. They can't sell those for profits. They're all cleared out too. That's effectively like having a Tesla margin balance in a way. And so just the fact that Tesla was so beat up the last few months, I think, and the stock like got cut down by like 70% since like 3 months ago, so I feel like that's, almost no matter what came out on the earnings call, almost no matter how they reported earnings, I feel like if you had a bunch of parallel universes starting from that point, that the Tesla would be up to 170 plus no matter what on any of those cases. I'm not so sure that whatever Elon said really made a huge difference in the stock price. I just think like based on the volume and like this options craziness and just a crazy like rubber band spring ready to push Tesla back forwards on this event because it's been so oversold for so long. That's just my thought, if that makes sense. I don't know.
Yeah, no, I mean, I think there's certainly truth to that. The one thing that seems different, like Q3 was kind of a similar situation from, like the actual numbers were kind of okay, nothing to write home about, but
Yeah.
not terrible either. But Elon was like talking about how it's going to be bigger than Saudi Aramco and like all these other things that were like bullish but vague.
Yeah.
And there's like all these comments of like, oh, like FSD drives me around Austin and it does such a good job and it's going to be really important going forward. Like
Yeah.
the analysts completely ignore that, but what they can actually put into their models is okay, margins greater than 20%. The take or the order rate is double production right now, so maybe that levels off, but we can model 1.8 million right now and feel reasonably conservative about that. And the operating margin and gross margin guidance that they gave, like there's actual inputs that they gave for the first time, which like the stock was cratering on the back of these price cuts. And there were people saying like, oh, if you just take the 25% gross margin or whatever that they've had historically and take like a 20% haircut on top of that for the price cuts, then like they're giving up half or more of their gross margin, which is like a crazy analysis, but that's what some people were doing. And so I think they kind of dispelled the worst of those gross margin issues. They gave actual guidance on the credits for the IRA, which I was surprised they did. So I
Hmm.
guess they gave at least 5 like tangible data points that people can use to model 2023. And I think when you do that analysis, it's like, okay, the we're not going to be at like $2 of earnings per share,
Yeah.
with all these
Yeah.
inputs that they gave us. So to me, that
Yeah.
was what was different about this call.
Yeah. Yeah. I mean, I think Matt, you and I are a good combo. Like you get the fundamentals very strongly, all that really well. And that's ultimately what drives the stock one direction or another in the long term. But the short term, like day-to-day stuff, it's just so uncertain and unexplainable sometimes
Yeah,
of what's
that's
moving
true.
the stock that I
We don't
don't know
really
for
know.
sure. I'm just poking questions. I'm just creating like potential scenarios of what moved the stock yesterday or the day after or whatever, because we just don't really know the day to day. It's like quantum entanglement is the analogy I use. It's like you just don't know what's moving it that one day. But if you zoom out, you can see what that thing is. But when you go to the subatomic level, it just looks like complete randomness. So that's what the day to day movements are like. Sometimes I feel like it's just really hard to say. And then you throw in this options craziness. It's just like a whole nother uh it's just a whole nother thing to try to figure out the day-to-day movements. So um yeah, I mean those are interesting takeaways. And the gross margins missed, we were talking yesterday, and a lot of that gross margins on our model we think we missed is because we haven't been factoring in the lithium costs as much as perhaps we should be, right? Is that what we're thinking?
Yeah, I mean that was one of the things that has really like I didn't. you kind of heard about raw material price increases, but
Yeah.
in the last couple of years, lithium has like 10x. So it went from being something in the neighborhood of like $300 or $400 per car to like 3 or 4,000.
Yeah.
So it's been like a huge cost increase that I wasn't really taking into consideration separately. And so, I'm sure you did have some kind of production efficiencies from Q2 to Q3 to Q4, but you didn't necessarily see the COGS go down. And I think lithium prices is a big part of that. Now they've come down quite a bit. At least the spot prices have come down from their peak. Tesla doesn't
Mhm.
necessarily buy at the spot, so we don't know exactly the makeup of kind of how all these the prices will go going forward. But it does seem that these kind of sustained high lithium prices are probably here to stay for for probably through the end of the decade is my view, and it wouldn't surprise me if they ratchet back up. We'll see where that all shakes out, but if
Yeah.
you're going to scale to like terawatt hours, you need a lot more everything, but lithium especially.
Yeah. It's something you and I are trying to keep a close eye on, and we're trying to stay in contact with some people that are have more expertise on that than us. So yeah, certainly something to keep an eye on, the lithium prices.
Yeah, and just today on that note, I mean, GM announced a deal with Lithium Americas where they're making an investment in the company, an equity investment, and they're securing some supply from their Thacker Pass plant or project, which has not been approved yet, but probably will be approved this year. So GM's taken some steps to kind of solidify their plans. And there's Piedmont. I didn't realize Tesla actually had a new agreement with Piedmont to supply some lithium. So my
Mhm.
my sense is they're good for the next couple of years, but 2026 and beyond, they need some additional agreements or to figure out this clay extraction process that they've patented.
Yeah. And I think a lot of the answers to these concerns are going to be shown whenever Elon reveals Master Plan Part 3, which is all about scaling, right? And so I think these are all things
Yeah,
he is very well aware of, and the Tesla team are very well aware of, and have,
yeah,
I would assume, have plans to scale. And so I hope that March 1st, is part of March 1st is Master Plan Part 3 revealed. Do you think that's likely or
yeah.
no?
I've been thinking that more and more lately. I mean, it's a little overdue. I mean, what was he teasing that like in October or something? He said he was writing it.
Like last
It
year,
was
early last year, I think, or something.
it
It's
was
been
even
brought up a
earlier than
couple
that. Okay.
times. Yeah, yeah,
Yeah, so like he's clearly worked on that, and there's probably reasons why he hasn't wanted to reveal it yet. But I would
yeah,
not be surprised at all if they do release that as part of the March 1st event. I'm
yeah,
really looking forward to that. I mean, I'm getting more and more excited the more I kind of do some digging. I don't know if you saw this,
yeah.
but Connecting the Dots had a good like video on the Highland Project Highland and what
I heard
that
about
might
it.
be.
I didn't watch it though. But what is it? Just like manufacturing technologies being revolutionized, sort of? Is that the gist?
Yeah, yeah, it's essentially, and it was kind of the idea that like the long term sustainable advantage of Tesla. They've always said they're manufacturing, and so it's not just like front and rear castings for the Model 3 like some people have speculated. It's an entirely new kind of change in the machine that makes the machine. So
Yeah,
yeah, there's some good kind of theorizing in there. We don't know obviously, but the speculation I thought was interesting. Um, but yeah, kind of coupling that with some of the stuff that Franz said in that recent interview, he's most excited about this new product that he's working on right now. I mean,
yeah,
it's kind of exciting to think what they might have up their sleeve. And then Elon actually said something similar on the earnings call that their new products are incredibly exciting.
yeah. Most of which no one has any idea about, or they haven't
Yeah.
shown. Yeah, I'm excited. It's just, it gets me excited and giddy. To be a long term Tesla investor. I'm just super psyched. Um, So maybe we'll find out more. The Project Highland could be just like revolutionize. Like I don't. Yeah, they don't want to reveal it. They're installing some stuff right now. Apparently, according to Tesla Radi, some kind of manufacturing equipment already in Fremont for it. One speculation I've heard, which it seems possible, is that it's basically. It's going to displace the Model 3, whatever this model, what it's like, it's not the Model 3, it's
Yeah.
something different, but it's similar, but it's just like being manufactured completely. It's going to be the same quadrant, the same functional utility as the Model 3, and maybe the same similar size. Technology inside it will be very similar, but they're going to produce it, manufacture it in a very different way, like a single die cast mold, maybe, and like some other crazy stuff. Who knows? It'll be like an
Yeah.
actual Matchbox car, just much bigger, And so they'll get the cost down to be like, instead of the cost of producing a Model 3 now is what, like 30 something thousand, 30,000.
Yeah.
Maybe it's
A little higher, I think. Yeah.
20,000. Yeah, maybe it's 20,000
Yeah.
to manufacture it, and so then they can sell them for 28,000 instead of 38,000 or something. So that's my guess, is that it's going to be just a revolution of how they're
Yeah.
producing the Model 3, and it'll be slightly different.
Yeah.
Same
I
functionality, but
think.
different.
Yeah, I think that probably is right. But think how ridiculous that would be. Like if they have a $30,000 car, then after the tax credit, it'd be 22,500.
Yeah.
Like the economics, like how does any ICE car compete at that point? Even if it's a smaller bat, like maybe you only get 200 miles on it, or like 180 or something like that.
Hmm.
But still, like it seems crazy to me that like any ICE could survive that.
Yeah.
And I think he even made the comment that it's going to outsell 3Y, S, and X combined. Which, if you're moving that far down market, I think that kind of makes some sense. So
Yeah.
I don't know. It's exciting times. I've been like the last 3 to 6 months, I've been in this habit of like bringing down my expectations for earnings based on price reductions and economic
Yeah.
fears and all that. I'm like, oh, I thought earnings was going to be up here, now it's up here.
Yeah.
So like I've been kind of like, all right, well, maybe we don't have a whole lot of runway left. But then I start hearing about this stuff, and it kind of rekindles the reason I was excited about the stock in the first place. So I
Hmm.
agree, as an investor, it's super exciting to just think what they might be developing down the road.
Yeah. Maybe we should just go to Q&A now. We've gone on for a while. I don't think there's anything else pressing is there anything else pressing we want to talk about, or should we just go to Q&A?
Now
What do you think,
let's
Matt?
jump into Q&A. Yeah.
Okay. All right. First question from Barbecued Veggies on Twitter. Do you think the impetus for Giga Nevada expansion was the Inflation Reduction Act, like shifting resources from Berlin to Ramp 4680 in the U.S. instead? I think it helped. I think it helped incentivize the Nevada expansion. I'm not so sure the Nevada expansion would have happened so quickly, or without that. What do you think, Matt? I'm not sure, but what are your
Yeah.
thoughts?
I definitely agree. I mean, I had a tweet about it, I think, last week, where if you just do the math on the credits that these are likely to qualify for, it was like 5 point something billion just in credits per year on that
Hmm.
scale, which is more than the capital cost that they said they were going to put to make this factory. So if you're Zach Kirkhorn and you're like, well, we're going to put a 4680 line in Berlin, but we can get an extra 5 billion per year if we site it in Nevada instead. Like it's a pretty easy answer, I think. So
Hmm.
yeah, I think that I don't think you can possibly ignore the $5 billion in credits and say that didn't have an impact. So yeah, it's a really big deal in my mind.
Hmm. Next question from Andrew Bazile. How you doing, Andrew? Question: do you think robo-taxis will be possible with current Tesla vehicles? Wondering because of Elon's statement that Hardware 3 will be only 2 to 3 times better than average human driver. Is this a Tesla risk? Yeah, I do remember that statement. That did catch my attention when he did mention that. Yeah, the robo taxis, they're a ways off. The current model Tesla vehicles, I'm not sure what the plan is with that. I gotta think that if they can install new computers into the current Teslas, and didn't they make all the Teslas kind of uh, available, like readily accessible to have the
It was
computer
it was
upgradable
backward
easily?
compatible. Yeah.
Yeah. So maybe I think that if they can upgrade all the computers, then the current computers in Tesla maybe are only 2 to 3. But once they have a better, set of chips to put in there, then maybe it'll be 5 to 10 times, better than an average human, because the processing speed and all that, and of the neural network that you can put in there and such. So, my guess is that might be needed to get to kind of the robo taxi level. and they'll have to have like a mass kind of production of these chips to, everyone who wants to participate in the robotaxi is going to have to make an appointment with the Tesla service center to get their car brought in and have the chip the new chips put in or something. What do you think, Matt?
Yeah, I mean, I do think that robotaxis are probably not going to be possible for the current vehicles. But I don't, to the question that Andrew poses here, is this a Tesla risk, like a stock risk? I don't think that it is.
Hmm.
Tesla never promised that, you can, if you buy FSD today with your car, then, down the road, you can, watch TV in your car, or you can,
Yeah.
they didn't promise a L4 or L5 system. What they actually promised on the website is automatic driving on city streets and stop sign recognition
Hmm.
and that sort of thing. And they're going to be able to deliver that on hardware 3. I mean, they mostly already have. It's just not 100% perfect yet. It's not
Hmm.
even it's too glitchy to be I guess qualified for delivering all the stuff that they said they need to deliver. So I don't think this is actually a Tesla risk that they don't deliver autonomy on like my Model Y right now. They'll be able to recognize the revenue. We saw that in Q4. They recognized a huge chunk of the revenue. So they'll be able to recognize all the revenue going forward as they expand this to different geographies. But yeah, my sense is it's probably not sufficient for like true robotaxi autonomy, but that's okay in my mind.
Yeah, I see a couple comments saying that they're boiled down. AH is saying they guess hardware 4 require different and better camera placement. I know there's a lot of that going around. That sentiment among the Tesla full self driving kind of Twitterverse. I don't believe it's necessary for different camera placements. I think that's the one thing you can't change either. Like, you can't really bring your car in and say, hey, I need the cameras in a different spot. They're not going to be able to do that. But I think the camera placement is fine. I mean, if you think about it as a human, our 2 cameras are just where the driver's seat is. It's not even at the forward, front. I think people speculate they need the cameras at the front bumpers of the car or something like that. But I don't think so. I mean, our human eyes are kind of where the steering wheel is. It's not. I think the front cameras are like even a little more forward than that, and they're fisheye lenses, and they can see more. So I think the software can get to the point where the best human drivers, which are 10 times more safe than the average human driver. So I think the software can get to the point where the best human, at least as good as the best human drivers, maybe even better.
Yeah, I mean, Chuck Cook is I think one of the advocates of the,
Yeah.
you need to move up the camera placement, and I'm sympathetic to that view, to be honest with you. I mean,
Hmm.
just the most basic example is like the camera is like right here on the B pillar, and if I'm in a tight corner or like a turn that he's famous for, I'll just lean forward to see forward, and you can't do that with the camera. Like you can pull forward the car, but you can't like swivel forward and get a slightly different angle or get a change in anything about the placement. So it wouldn't surprise me if when the Cybertruck is released, like the camera placement is pulled forward somewhere.
Hmm.
But we'll see, because
Yeah.
I wonder if that would make the training harder if you've got a different set of hardware placements. I'm not sure if that would cause difficulties. That would make it difficult to kind of mesh
The
the two different data
software, the
streams that you've got.
training.
Yeah.
Yeah. Yeah. Yeah. I mean, I don't know. I think maybe it'd be marginally better, but I'm not sure it's needed. I think Tesla can also, it's digital response timing, the movement and the torque, but backwards and forward. So it could always move a little bit forward, then move a little bit backwards. If it was too dangerous. Which it hasn't. Elon had referenced that a while back that they're going to put that in place, but I haven't seen that come to fruition yet. But that could be functionally helpful if needed.
Yeah. And Andrew does say in the comments that Elon said no hardware 4 upgrades for current cars.
Hmm.
Yeah, he did say that on the last
Oh, he did.
call. And
Okay.
then he also says robotaxis were promised in 2018 when we ordered Model 3. So I think it depends on how you define promise. Like, did Elon talk about that at Autonomy Day? Yes.
Mhm.
Did
Yeah.
Tesla's website where you actually order FSD say that? No. So
Yeah.
I don't think there's legal liability there, because
Yeah.
his comments on kind of the future of autonomy
Yeah.
are
And he
not the
didn't
same as
say,
like a customer order.
yeah, the media takes these things, so little. Like he didn't say I promise these will all be robo taxis. It's like, he said, yeah, we'll have all these robo taxis, and that hasn't come true. But also, like, the burger shop in town that says best burgers in town on its sign, that's not a promise to me. That's just like, okay, I'm not gonna like take them to court over that. For example, like if they say I promise these are the best burgers, still wouldn't take them to court, but it would be like more
Yeah.
like, okay, well, you promised it's the best burgers, but it's not. You could at least make an argument there. So I think people really take Elon a little too crazy. Like, he's so public and he talks a lot and he talks off the cuff, and I think we have to appreciate that. Whereas other CEOs are like non-player characters that just like write they read
Yeah.
what's on their script by their legal lawyers, and so we can't get anything out of them. It's just so frustrating.
It's interesting because he did actually say he kind of recycled language of when they solve autonomy, it's going to be the biggest step change in asset value in history. He said that again
Mhm.
on this last call, which is kind of
He
interesting
did.
because that would
Yeah.
that would indicate that he does think that like current cars could be robo taxis. So I don't know,
Yeah, that's
or
true.
maybe his view is just that more people will order FSD because you can
Or
bucket this in the utility, like the utility increases.
the utility
So,
increases,
but
or that they will be robo-taxi available, but just not as safe as the hardware for robo-taxis you can buy that are new. So maybe he thinks it's going to be completely acceptable to have robo-taxis that are 3 times safer than humans. But and those will be, why wouldn't you put those out if they're going to save lives on average, right? But the
mhm.
newer cars are 10 times safe, so of course all those should be robo-taxis too. So maybe that's the case, right?
Yeah. Yeah. It's last thing on this. I see Andrew also says that the website in 2018 said our FSD cars could go on the Tesla network once the software and regulatory approvals were realized. I never
Oh,
saw that. So if that's true, that's probably that could be a potential litigation source. So I don't know.
yeah.
That's interesting. I hadn't heard that before.
If the litigation, if the current cars never were able to go on the Tesla network, but I
Yeah.
think that they'll allow the current cars with this suite, the hardware 3, to be able to be in the Tesla network. And the Tesla network could also not mean just robo taxis; it could be like their own version of Uber. You won't really
Yeah.
know for sure, I guess. Yeah. So
There's probably some ways they could wiggle out of it a little bit.
yeah,
Oh,
yeah.
we never got regulatory approval.
Yeah. All right, let's go on to more questions. There's good discussion, Andrew. I like the topic there. Just for funds on YouTube. Question: given the 10K in current knowledge, what do you see for Megapack gross profit in Q1 for 2020 and for 2023?
Yeah, so I'll take a crack at this. We had
Yeah.
energy gross margin. I think it was about 12% in Q4. Most of that was related to Megapack. Just if you, they don't explicitly say that, but if you kind of do the napkin math of how many gigawatt hours they deployed, the revenue has to be mostly from Megapack. So the only thing I was just looking at this before we got on. There was, I think it was something like 1.1 or no, it was 1.8 billion in energy inventory. So that's solar, Megapack, everything.
Hmm.
But maybe 1.4 billion of that or so is Megapack related. And then if you want to be as generous as possible, which I don't want to be, but just for the sake of argument, say there's a 50% gross margin, that would
Hmm.
be total sales of the inventory of 2.8 billion, which would be 1.4 of gross profit. I think, I mean, the fact that we saw 12% gross profit in Q4, to me, that's consistent with what we were saying when we went through the model last week of it's going to ramp. It's not going to go from, like 8% gross margin to 50 overnight. So maybe we see 15% gross margin in Q1, and maybe revenue goes from, I forget what it was, like 1.6 billion or something like that in
Yeah,
Q4. Maybe we get to 2 billion and a 15% gross margin. That'd be a huge win in my mind. Um,
that'd be
so
big.
yeah,
Yeah.
that's kind of what I'm thinking is, there's the data in the 10K 100% disproves in my mind the idea that Lathrop's at like a 10 gigawatt hour per quarter ramp rate. But that doesn't mean that it's not important. So, I think this is just kind of the caution that we've been saying all along of like, it's ramping, it is real, but it's not, it's going to revenues and gross margin will just kind of slowly ramp up over time.
Good answer. From Dirk Steinhoff on YouTube, question 1. What do you think is the maximum number of cars Tesla can build in the existing factories? I mean, I think it's probably what they mention on their earnings report. And then there's like a
It
greater
was
than.
greater than 1.9 million was the combined capacity right now.
Yeah, yeah. And a couple of the greater thans were like what? Uh, Shanghai.
Shanghai is like
Was
way
greater
higher
than.
than
Yeah, it said 750, right? But it said greater than 750. But it's in Shanghai. It's like probably way higher than 750. I think, if I recall.
yeah, yeah,
Yeah,
it's I forget the exact number, but it's like closer to 950 or something like that. It was like not
yeah,
even close.
yeah.
But at the same time, like Austin and Berlin are not close to their stated capacity yet. So
Hmm. Hmm.
yeah, I
Yeah.
mean,
What do you think, Matt? I'm going to say 2.2 million if everything hits right on supply chains and there's no, shutdowns and everything's humming. I'm going to say 2.2 million for this year. What do you, if everything was perfect, but that also assumes the demand at the current price points of everything is there. Like the Model S and Model X capacity might be 100,000 per year, but maybe they only sell 50,000 because there's not demand for, 100,000 one, you know, $100,000 plus cars for Tesla, right? So, what do you think, Matt?
yeah, I mean, so Elon said on the call that they could actually do 2 million, and so just kind of taking into account the ramp of Berlin and Austin, they're not going to be close to their capacity in Q1. So, I kind of take it that Elon is obviously an optimist on almost everything. So if he's
Yeah.
saying we could do 2 million, then I'm kind of skeptical that they actually could do 2.2 if everything goes well, unless he's
Mm.
just completely sandbagging. So, in my mind, like 2 would be a home run. 1.9 is kind of my expectation, just to account for the ramp.
Yeah. Yeah. I feel like it wasn't long ago when we all thought that when so many people were thinking 2 million was in the bag for 2023, for
Oh yeah.
2022, for 2022, I mean. And at the end of 2021, everyone thought
Oh,
2 million was in the bag for 2022, I feel like, right?
I didn't think it was in the bag, but I
A
thought it
lot
was at
of
least
people did.
possible. And I remember
Yeah.
I was looking at my old model for that, and I was assuming they'd get to like 600,000 per quarter, like right around
Yeah.
now. And it's like,
Yeah.
oh nope, that's that was too optimistic.
Yeah.
So
Yeah.
I think we got spoiled with the Shanghai ramp for sure.
Yeah, the Shanghai ramp is the gem of Tesla. Yeah. All right, let's go to the next question here from Roman G on YouTube. Question: Can Tesla grow earnings per share with lower margins but higher volume? I think they can. Um, if the volume, if it, Matt, this is your question up your alley, but my understanding is they can. What do you, Matt? You want to kind of dive into it?
Yeah, I mean, the kind of so the short answer is yes, they can. And it would be very easy to do it if take rate for FSD goes up or if energy kind of surprises to the upside. But the kind of rough math that I'm looking at in my model is that for 2023, the kind of volume increases and price decreases roughly offset each other. So it's kind of EPS neutral. But then by the time you get to next year, you're going to be at a much higher ramp rate. And I think you're going to have a lot of these kind of production efficiencies improving by then. So I'm modeling another price cut next year. And then I think that you're going to kind of return to pretty significant EPS growth next year and the year after. But if FSD surprises, if energy surprises, then you could have um, more significant earnings per share growth than I'm expecting right now this year. I just don't want to bank on that.
From Stu on YouTube, when does lithium demand outstrip supply? This is exactly what Matt and I have been talking about recently. This is going to be the big question for EVs. It has been a question for a long time, but I think more and more people are zeroing in on this, especially in light of this GM deal this morning. It helps, is just a symptom of this concern. It seems real. Elon mentioned it in the call, and he's mentioned in previous earnings calls. He's said something once like, you should, if you like to make money, if you like to print money, you know, work on lithium or something. I forget the exact terminology, but he says like software, like margins, and can't go wrong. So I think lithium supply is clearly an issue, a concern, long term. How medium term a concern it is questionable, I guess, and where that medium term is. What do you think, Matt?
Yeah, I mean, it's the big issue that I'm seeing from people who are in the industry right now is that all the kind of announcements of there was something like 14. Here, I've got this information right here, so I'll get it right. Um, Benchmark Minerals did a really great kind of infographic that the Tesla 140 gigawatt hour Nevada factory is going to consume 100,000 tons or more of lithium, which is 18% of the world's current supply. And so then you think about that, and there is something like 100, or not 100. There's something like 10 to 15 gigawatt or gigafact or 13 gigafactory sized projects that have been announced. So you've got 18% of the world's assets or of the world's supply, and you're going to take that amount and multiply that by 13 just with the announced gigafactories, let alone the ones that haven't been announced yet. And that's obviously much more than the current supply. So now more supply is coming online for sure. Lithium America is this GM deal. That's a new site. It's not proven yet. It's not approved. But everybody right now is trying to increase supply. The kind of industry watchers that I think are following this most closely, though, say that the supply on the extraction and the mining side is not increasing fast enough to account for all these announced factories. So
Hmm.
my sense is in the next couple of years, this issue is going to come to a head, and either some people are going to be supply constrained, and or prices are going to go through the roof, or there's going to need to be some sort of technical breakthrough, like Tesla is pursuing with this, clay extraction. It's unproven technique, but if they can do something like that, that could really, drastically move the needle. So
Hmm.
yeah, it's a big deal in my mind, and it's not clear how it's going to pan out, but medium term, it's definitely a big issue.
Yeah. I mean, I remember we had that roundtable discussion with Jordan from the Limiting Factor and Josh's Blonde a few months back. Anyone who hasn't seen that should. They follow, battery chemistry, battery supply, mining, refining, all that stuff very carefully. And my big takeaway from that roundtable discussion we had with them and we published on our channel is that uh, the real limitation is the regulatory processes in most of the world with extracting the lithium. There's plenty of lithium on the earth in all different places, as Elon has said, but the real problem is like in the US getting the approvals and the regulatory things. It's just it's a lot of red tape, and it takes years. It can take 10 years or something like that, if I recall, is what they said, to for one of these mines. Once the site is picked, for it to turn into like a mine that's actually extracting lithium and being used, it could take many years because of all that. So if that's the case, one card in the back pocket of Tesla and other EV producers could be, maybe like in the next political cycle, if DeSantis gets elected, for example, who's heavily allied with Elon and Tesla. I think it's pretty clear, or it will become more clear, I would imagine. But if DeSantis is elected and there's a more Republican friendly Congress, or business, EV friendly Congress, especially, or green energy friendly Congress that stays in place or whatever, then maybe there could be some like executive action order, similar to what happened with the COVID vaccines, like the warp speed to get the vaccine done very quickly. Maybe there's like a executive action warp speed for extracting lithium quicker, so that these mines can get up and going quickly, as opposed to, and just skip over a bunch of hurdles. So I think that's a possibility. I don't know. It could be wishful thinking on my end, but I could see that playing out that way. That's my thought.
Yeah, I could, and Tesla does seem to be pursuing that. I mean, there's that patent that was announced last year, I think, and so they're clearly trying to move the needle. And I think you almost need something like that, because there's not
Yeah.
enough mines coming online to get to a terawatt hour. Like that seems
Yeah.
really clear to me,
Yeah.
or to many terawatt hours, no less. So Yeah, this is a big deal, and I think I really hope that Tesla is capable of some sort of breakthrough here.
Yeah. Let's just do one more question. We're running out of time here. From Henry Albanto on YouTube. According to the 10K, Tesla's automotive inventory of 11 billion would suggest 282,000 cars in inventory based on the Q4 automotive cost of goods sold. Can you make sense of that for us, Matt? What do you think about this?
Yeah, so I haven't looked at that in too much detail, so unfortunately, I'm probably not going to have a great answer. We know that there's probably, what is it, like 60 to 80,000 cars, I think, that they actually have in like finished
Transit.
goods inventory. Yeah, well, yeah, it's in transit. So if you take the cumulative difference between deliveries and production for all of Tesla's history, it's in the 80,000 vehicle
I
range. I
think it's
think.
80
I don't know.
plus thousand. I think it's 80 plus
Yeah,
thousand, maybe close to
I don't know the
100,000. Because I think the
exact
buildup from
number.
the last 2 quarters has been like 70,000, 30 plus thousand each quarter, like an
Yeah,
additional net in the pipeline. And then coming into the third quarter, there's probably already a pipeline of at least 30,000 anyway. So you add it together, I would think 100,000 plus probably just in transit total. I don't know, maybe 80 to
yeah.
100,000, maybe more than
So
100,000.
So that explains maybe a third of that number if these figures are right. But then there's also work in progress, which
Mm,
is you've got like half of a car stamped, or you've got like batteries for, yeah, I don't know, 40,000 cars that you've bought that are ready to go, but they're not in the car yet. They're not, they haven't been sold. So it's not only how many cars do you have, it's also how much work in progress do you have, that's all the different pieces. And I would imagine like in Berlin and Austin, as they're ramping too, you probably
yeah.
have a lot of these vehicles that are, just, you've got maybe one part of the production line is working really well, so you've got like all the body and whites ready to go, but
Yeah.
like the whole line isn't streamlined, so you're kind of stockpiling pieces of the car but not the whole thing itself. So
Yeah.
I haven't dug into this number in particular, but like looking at it only from a finished goods standpoint is not the right way to look at this. It's both
Yeah.
finished goods, it's work in progress, it's a
I'd
bunch of
be
stuff.
I'm super curious. I don't know if anyone in the comments, probably not, but if maybe even Henry knows, but what was that number last quarter's 10K? Was it
Y-
like 3 billion and then suddenly went to 11 billion, or was it like 9 billion and it went to 11 billion? That's what I'd be curious about too. Yeah.
Yeah, I was trying to find that. The other thing while I'm looking up that one particular item is, it's also like how many tires does your service center have? Like there's a lot more that goes into inventory than than just just um, the actual
Yeah.
finished goods. So I mean, it was 10. So they did split out the energy revenue. So the total inventory in December was 12.8 billion. In September, it was 10.3 billion. So it's not like a drastic
Nah,
change
not a
considering
drastic
the
change.
the huge increase in delivery or in undelivered vehicles that you saw.
Yeah.
So I don't think
Yeah.
there's anything strange going on there.
Yeah, I'm sure Gordon Johnson would have a different answer. Be fun to hear what he says on the spot about that. He'd probably have all kinds of conspiracy theory thoughts about it. Yeah.
Yeah, you can
I mean,
do. If,
yeah.
if anyone's curious in this, you can do what's called the cash conversion cycle, and I don't remember the math all off my head, but you can do like your inventory as a percentage of your cost of goods sold, and then like your receivables, and so you can like add up these different components of working capital to get to like how long does it take for you to start building, your inventory to getting your cash from your customer, and when you do that, Tesla's cash conversion cycle is much faster than GM or Ford or anyone else out there. So
Yeah.
it's a working capital is actually a benefit for Tesla. So I really would not worry about this.
Yeah. All right. Well, I think that's it. I did not come prepared with a joke this time, but next week I'll have a joke.
Oh,
Yeah.
the people are going to be up in arms about that,
Yeah. Yeah.
Emmett.
I
It was
know.
good tradition you had going there.
Yeah. Got to keep it going. All right. Well, great seeing you guys this week. And yeah, we'll be back next week, same time, same place. And hopefully more positive news to report with the markets and Tesla. With who knows? We'll see. But I can't believe we're already like 28 days away from March 1st. It's crazy. It's not a
Oh my
leap year,
gosh,
is it?
whoa,
Yeah.
that's really I cannot wait for that event. That's going to be
Yeah.
awesome.
I hope. I hope it's not a leap year because every day counts. I'm excited. It's like a kid at Christmas again with these
It is
events.
not a leap
I'm
year, so
always
we're good.
good. All right, 28 days or 29 days, I guess. I don't know. So, all right, guys, we'll see you next week. And